Hello everyone. I hope I am audible to you all. Good evening to everyone. Welcome to revision lecture day 4, Audit Intermediate. Now, I could not upload part 2 of the revision lecture day 3 because of some technical audio issues that I faced. Because I have already recorded the lecture, but due to some reasons, the audio was not properly taken by the software. So due to which I could not upload the video. I had some technical issues. By today afternoon, somehow it got sorted out. So luckily I am able to come live as the issue has been sorted out. So I will have to re-record the lecture again today night. Okay. So after my baby sleeps, then I will record it and I'll upload it tonight. Most probably by tomorrow morning it will be uploaded. Okay. The audit report area which we have not discussed in the live session, I will be uploading it. Okay. So thank you so much for the support. I hope you are taking the maximum benefit of the revision lecture that is being uploaded. It's completely, and even the answer key has been will be most probably would have been uploaded in the Lakshya's website by now. So you can also go to the answer key of the previous test paper. Once the audit report lecture has been uploaded tomorrow morning, maybe after 2-3 hours, tomorrow afternoon 2 o'clock, I'll put the test paper for the day 3 sessions, day 3, whatever fraud and audit report examination test paper I'll upload in the Lakshya's website. Okay, so please make full use of it and study really well. That is very, very important. Today we are going to deal with company audit. Yes, company audit is what our discussion is all about. We have few sections of 128, 141, 140, 139. Those are the sections that we have decided to deal as on day 4. So most probably I'll be able to complete the portions in the given time, because there is not much portions to discuss. It is a revision anyway, so we can quickly glance through it. So we will surely look into it. Okay, so now I'll move forward. I'll start with the revision lecture. Okay, so just let me know whether I am audible properly to all of you. Yeah. Yeah, yes, I see few messages about being audible. So I think we can start the lecture. Let's not waste time. Okay, so let's start with day 4 of revision lecture, CA Intermediate. We start with the company audit section 128. Okay, so section 128 is what we are going to discuss. Now it's time for me to become small and time for us to get the material on, right? Yes, 1 second. Yeah, yes, where am I? Yes, time for me to be small. Come on, be a little small. Yes, now I'm a little small. Yes. Now let's go to section 128 of the Companies Act 2013. Now, what is section 128 of the Companies Act 2013 talking about? Section 128 of the Companies Act 2013 discusses about the books of accounts to be kept by the company. Books of accounts to be kept by the company. Yes, you can see it here. Fine. Yes, books of accounts to be kept by the company. Now, let's start reading subsection 1. It says, every company shall prepare and keep at its registered office. So, a registered office. So every company shall prepare and keep at its registered office books of accounts and other relevant books and papers and financial statement for every year, which gives a true and fair view. So take a notebook, book and pen ready, come on. Okay, so first is you have to keep the books of accounts at which office? At the registered office, and it should show a what view? A true and fair view of the state of affairs of the company, including that of its branch office or offices, and explain the transactions affected both at the registered office and its branches, and such book shall be kept on, come on, write in your notebook, it should be kept on accrual basis and according to double entry system of accounting. Very, very important 4 terms here. 1. Every company shall prepare and keep books of accounts at which office? Come on, at its registered office, and it should show what view? A true and fair view of the state of affairs of the company, including its branch office, and it should be kept on what basis? On accrual basis and according to what? Double entry system of accounting. Do you get my point? So this is subsection 1 saying that the books has to be maintained at which office? Registered office. Now, if you are a company registered under section 8 of the Companies Act 2013, doing non-profit, doing activities of charity, should you maintain books of accounts at the registered office? That's my question. Yes or no? Yes or no? The answer is yes. Why the answer is yes? Because it is every company shall prepare and keep at its registered office what they should keep? Books and papers, financial statement for every financial year. It should show a true and fair view, accrual basis and double entry system of accounting. Now listen to me carefully. Now I have few questions to ask you. Listen to me carefully. 1. The books of accounts of the branch. The books of accounts of the branch. Now, where will the books of accounts of the branch be maintained? That is my question. Where will be the books of accounts of the branch office of the company be maintained? Now, if you take section 128 of the Companies Act 2013, it says it should be kept at which office? Come on, it should be kept at which office? Registered office. So it means that even the books of the branch, if you look at the subsection 1, it is as if the books of accounts have to be maintained at which office? At the registered office. But do you think it is practically possible for a company, imagine having 100, 200 branches, to keep the books of accounts of the branch at the registered office? No. So the Companies Act will have to address this issue. How does the Companies Act address this issue? By subsection 2. Now go through subsection 2. Come on, go through subsection 2 for the answer. Books of accounts of the branch of the company. It says where a company has a branch office in India or outside India. Now I am showing you the screen for you to read with me. Do you understand? Where a company has a branch office in India or outside India, it shall be deemed to have been complied with the provisions of subsection 1. What does subsection 1 say? Maintain at which office? Come on, which office? Registered office. So it will be deemed to have been maintained at registered office if proper books of accounts relating to the transactions affected at the branch office are kept at that office, which means which office? The branch office itself. And which means you can keep the books of accounts at the branch office, and proper summarized returns periodically are sent by the branch office to the company at its registered office or any other place referred to in subsection 1. Which means subsection 1 requires you to maintain the books of accounts at which office? At the registered office. So what about the branch office? The branch can maintain the books of accounts at the branch itself, provided the branch will have to send what returns? Summarized returns periodically to which office? To the registered office or at any other place which is where the books of accounts are maintained. I'll tell you about that later. Now listen carefully, it clearly means the branch can maintain the books at the branch itself, provided summarized returns have to be sent. Are you getting my point? So it is deemed, that is subsection 2 says, the moment you send this summarized returns, it is deemed that the books of accounts of the branch will be maintained at which office? Registered office. Because the registered office will have what returns? Summarized returns. And it applies to branch office in or outside India, branch office in or outside India. Are you getting my point, my students? So basically, company has to maintain books of accounts at registered office. The branch office can maintain the books at the branch. Provided branch has to send what returns? Come on, summarize returns when periodically, where to the registered office or at any other place where the books of accounts are maintained. Okay. Second question. Now, can the company shift the books of accounts from the registered office to any other place is the question. Now imagine the company has its registered office in Kochi. Now it wants to shift its books of accounts from Kochi to Bangalore, where the Bangalore is actually having the company has a corporate office there, or company has an office in Bangalore, and they want to shift the books of accounts from Kochi to Bangalore, and the registered office of the company is at Kochi. They are not shifting the registered office. They want to shift the books of accounts from the registered office to Bangalore, which is another office of the company. Now the answer, again for the answer, we have to go to subsection 1. Now it says, provided that all or any of the books of accounts aforesaid and other relevant papers may be kept at what? Such other place in India, such other place in India. Understand, the such other place can be in India, as the board of directors may decide. As the board of directors may decide. Who will decide? The board of directors may decide. Where such decision is taken, the company shall, within how many days? 7 days. 7 days of decision taken by whom? By the board of directors, mostly by calling a board meeting, passing a board resolution. Within 7 days of passing such resolution, they will file with the registrar a notice in writing giving full address of that other place. In our example, the other place was what? Bengaluru, correct? And registered office was at where? At Kochi. Now we want to maintain the books of accounts where? At Bengaluru. So basically what should the company do? First, the board of directors will have to decide, that is pass a resolution. Then within how many days? 7 days of passing such board resolution, the board of directors, the company will have to file a notice in writing giving full address of such other place where the books of accounts are to be maintained. Are you getting my point? So it can be only shifted to any other place in India. That is why in subsection 2 they say the summarized returns may be sent to its registered office, come on, or other place referred to in subsection 1. Are you getting my point? That means if it is in the registered office, you send the summarized return to the registered office. If it is any other place where the books of accounts are maintained, then you send to that other place where the books of accounts are maintained. Okay, this is subsection 2. So 128 subsection 1, 128 subsection 2. Fine. Next question is books of accounts needs to be maintained. Books of accounts needs to be maintained in physical form or electronic form. You tell me, it will be in physical form or electronic form. Books of accounts can be maintained both in physical, that is, it can also be maintained in what? Physical form. It can also be maintained in which form? Electronic form. So electronic form also you can maintain your books of accounts. Then next question is, listen to me carefully. For how many years shall the books of accounts be maintained by the company? Said once the books of accounts has been prepared, for how many years should you retain your books of accounts? Listen carefully. I know everybody has the answer called as what? 8 years. Everybody writes 8 years. No, 8 financial years. No, you should always write how, from where. So you should be very careful. Everybody writes 8 years, but listen to me carefully, by heart this. Books of accounts of every company relating to a period of not less than 8 financial years immediately preceding a financial year. That means if so you have to keep books of accounts for at least for a period of how many years? 8 financial years from the immediately preceding financial year, or where the company had been in existence for less than 8 years in respect of all the preceding financial years together. Then if there is an investigation, ordered by the central government, such term as the central government may deem fit. Come on. 3 points. Books of accounts of the company shall be retained for a period of not less than, 8. You said 8 years. It is 8 financial years. Don't say 8 years. Come on. Not less than 8 financial years immediately preceding a financial year. Okay. Or where a company had been in existence for less than 8 years, which means what? Imagine the company is in existence for 3 years. You cannot tell them maintain for 8 years because it's in existence only for 3 years. So till the date of existence, that means for 3 years. Once the company crosses 8 years, then not less than 8 years books of accounts should be there with the company. Are you getting my point? And if there is an investigation by central government, such a term as the central government may deem fit. This is called as retention of books of accounts. Very important question. Students only learn one single sentence. How many years can the books of accounts maintain? Sir, 8 years. No. Read the whole paragraph like that. You should write in the exam. Okay, fine. It's a very good question. Now, one question to you. Audit working papers. Do you remember? Working papers of the auditor. That was for how many years? Working papers of the auditor. How many years? It was 7 years from the date of audit report. 7 years from the date of audit report. Do you understand? 7 years from the date of audit report. This is 8 years from the immediately preceding financial year. Are you getting my point? Fine. Then, now, next question is, who can inspect the books of accounts of the company? Who can inspect the books of accounts of the company? Listen to me carefully. Inspection of books of accounts. Inspection. I am telling you, you might find this easy, but it's not. Just answer now quickly. Can the shareholders of a company inspect the books of accounts of the company? Can they go and access the books of accounts of the company? Can they go to the registered office and access the books of accounts of the company? What is your general thought about it? Now, you might think, maybe a shareholder, why not? He's the owner. No, not possible. Read subsection 3. Books of accounts of the company and other books and papers maintained by the company within India shall be open for inspection at the registered office of the company. This point is only with respect to books of accounts maintained where? Within India. So books of accounts and other books and papers maintained by the company within India shall be open for inspection at which office? At the registered office of the company or at such other place in India by any, director during what hours? During business hours. By any director during business hours. Do you understand? If it is maintained outside India, then copies of such financial information shall be maintained and produced for inspection by any director subject to the conditions as may be prescribed. Basically, it is like you will have to inform the company if the books are outside India, like branch outside India, if the financial information is outside India. If the director wants the information, they should inform the company and the company will get the information to the director within a period of 15 days from the date of intimation by the director regarding the financial information he requires. Are you getting my point? So within India, open for inspection. During what hours? Business hours. Outside India, you ask the company. Company will provide the information within how many days? 15 days from the date of intimation given by the director. Are you getting my point? So within India, open for inspection. At registered office or any other place. During what hours? Business hours. Outside India, ask the company, they will give you the information. Are you getting my points? So, as per section 128 subsection 3, who is having the power to inspect the books of accounts of the company? It is the director. It is only the director. So 128 only gives the power to the directors to have access and inspection of books of accounts of the company. Now my question to you is, can auditor of a company inspect the books of accounts of the company? Can the auditor of the company inspect the books of accounts of the company? Now, you may be thinking, sir, what nonsense question are you asking? Auditor, can he access the books? So, without accessing books, how is he going to do audit? That will be your thought in your mind, correct? But my question is, can the auditor access the books of accounts of the company? Answer is very much yes, but you should always understand the power to inspect the books of accounts of the company is not as per section 128. It is as per section. The power of the auditor to access and inspect the books of accounts is as per section 143. Understand, it is as per section 143 of the Companies Act. Rights, powers and duties of auditor. Are you getting my point? 128 is giving power only to whom? To the directors of the company. 143 gives the power to the auditor of the company to inspect the books of accounts of the company. Are you getting my point, everyone? So this is basically 128, a quick revision what I have done. There are a few other things like who is responsible for maintaining the books of accounts and what will be the fine if the books of accounts have not been properly maintained, like managing director, whole-time director in charge of finance, all these things are there which I think you should go through. So having a quick revision to understand section 128. Section 128. Okay, fine. Very important section from the examination perspective, usually asked in the exam. Regarding the, this question is the most important question which is asked. This one. This is the most repeated question in the exam. This is the most repeated question in the exam. Shifting of books of accounts from the registered office to any other place in India. This is the most asked question in the exams. Okay, I would request you, just write this down. Okay, it means I just have this noted this down. This shifting of books of accounts, most repeated question. Yes? Note it quickly. Yes, now I'm slowly moving ahead to Companies Act discussion. Okay, Companies Act discussion. Now let's go to Section 141 of the Companies Act 2013. I'm going to the sections relating to auditors. See what material I have just taken. This is CA final material. You have IPCC material also. Same thing which is given here. Okay, final material is a little better for reading, so I've just kept the final CA final material just for viewing purpose. Okay, so section 141 of the Companies Act 2013, final or IPCC, old syllabus or new syllabus, section 141 will not change. Okay, so always understand, old syllabus, new syllabus. Sir, CA final, CA intermediate, sir, should I study this, should I learn this, this is applicable for me? Come on, auditing, section 141, Companies Act, applicable, anything. Sir, I am doing CS, I am doing CMA. Yes, listen to you. That also, if section 141 is applicable for your exam. As simple as that. Okay. So, let us learn about 141. Eligibility. Eligibility to be appointed as auditor of a company. Eligibility is who can be appointed as auditor of a company. Now, to be appointed, section 141 talks about the qualification. It says, a person shall be eligible to be appointed as auditor of a company only if he is a chartered accountant. Only if he is a chartered accountant. So, it says to be appointed as auditor of a company only if he is a chartered accountant. So, as far as an individual is concerned, to be appointed as auditor of a company, he must be a chartered accountant. Now, the auditor of a company could be either be appointed in an individual capacity or maybe a firm. A firm can also be appointed as auditor of a company. Firm can also be appointed as auditor of the company. Now, if you are appointing, now can you appoint the firm as auditor? Partners of the firm must be chartered accountants who are practicing in India. The majority partners of the firm must be chartered accountants who are practicing in India. Then the firm can be appointed as accountants, shall be chartered accountants who are practicing in India. See, it may be noted that a firm whereof majority of partners practicing in India are qualified for appointment as aforesaid may be appointed by its firm name to be the auditor of the company, which means majority of partners practicing in India are qualified for appointment. Do you see this? Majority of partners practicing in India are qualified for appointment, which means what? The firm should have majority of partners as chartered accountants practicing in India. Majority of partners as chartered accountants practicing in India. Do you understand? So, majority of partners should be chartered accountants who are practicing in India. Okay. One small tip I'll tell you. I may be explaining in the way you want to understand this. But what I want you to do is to learn as if it is given here. Because it is law. You cannot write in your own words. See, explanation is for your understanding. When you write in the exam, this should be the words. It's better if you can by heart actually. It is better if you can by heart. Because when we write in our own words, the meaning might change. See, you cannot write in the exam, the firm can be appointed if the majority of partners are chartered accountants practicing in India. You cannot write like that. You have to write the majority of partners practicing in India are qualified for appointment as aforesaid. So this sentence also you should write when the question is about eligibility of a firm. Are you getting my points? It's not that you write in your own words. If you want to get really good marks in audit, you have to be a little more precise and little more, better in answering company audit, because this will give you full marks. Okay. Now individual can be appointed if he is a chartered accountant. Now firm can be appointed if the majority of partners are qualified for appointment. Correct? Now the question is, imagine there is a firm with 10 partners. In that there are 7 chartered accountants and 3 company secretaries, all practicing in India. Can the firm be appointed as auditor of the company? Can the firm be appointed as auditor of the company? 7 chartered accountants, 3 company secretaries, all practicing in India. Can the firm be appointed as auditor of the company? Answer is very much yes. Correct? Because there are 7 chartered accountants who are practicing in India out of the 10 partners, which is clearly meeting the eligibility criteria. Now, but there are 3 partners who are company secretaries in that firm. Now, they are also partners of the firm. Now, the firm is the auditor, yes or no? Now, what may happen is, because there are non-chartered accountants as partners and they are partners of the firm, they may start acting as an auditor. They may start signing as an auditor because they will say, I am the partner and I can do it in the capacity of being the partner of the firm. But can we actually allow it? No. Why? Because the person who is signing must be what? A chartered accountant, no? Because that is the basic eligibility for becoming an auditor of the company. That is why we have something called as, where a firm is including a limited liability partnership, is appointed as auditor of a company. Come on. Partners who are chartered accountants shall be authorized to act and sign on behalf of the firm. Listen to this carefully. When you are appointing a firm which includes a limited liability partnership, that means when I say firm, it includes limited liability partnership. It includes limited liability partnership. When you appoint a firm including LLP as auditor, only partners who are chartered accountants, chartered accountants shall have the authority to act and sign on behalf of the firm. Are you getting my point? So to act and sign on behalf of the firm, you should be a chartered accountant. You should be a chartered accountant and the partner of the firm. Are you getting my point? So this is 141 eligibility. 141 eligibility. 1, he must be a chartered accountant. If you are appointing a firm, majority of partners practicing in India and qualified for appointment. In case you are appointing a firm including LLP, only partners who are chartered accountants shall have the authority to act and sign on behalf of the firm. Are you getting my point? This is in our example 10 partners, 7 chartered accountants, 3 company secretaries. Now in this case only these 7 chartered accountants who are practicing in India shall be able to sign the audit report on behalf of the firm. Now why they are saying firm including LLP? What is LLP? Now you may be saying the full form, no? Limited liability partnership, which we all know, which is given here. LLP is actually, if you look at, is LLP a body corporate? Is LLP a body corporate? So first you tell me what is body corporate, then I'll tell you what is whether LLP is a body corporate. Now body corporate is what? It is a separate legal entity. Body corporate. What is body corporate? It is a body incorporated under an act. It is a body incorporated under an act. That is why it is body corporate. Company is a body corporate. Now LLP is a body corporate? Yes. Why? Because LLP is incorporated under which act? LLP Act 2008. But here what they have done is they have included LLP in what? The firm. Actually LLP is a body corporate, but here they are saying firm including LLP. That means in the definition of firm they have included LLP even when LLP is actually a body corporate. So LLP can be appointed as auditor of a company? Yes, provided the majority partners of the LLP must be chartered accountants who are practicing in India. Okay, fine. Now, next comes disqualification of an auditor. 141 subsection 3. Now, what is this disqualification of an auditor? Now, what is this disqualification of an auditor? Now, disqualification of an auditor, you should be very careful is, disqualification of an auditor, what do you mean? Actually, disqualification means what? Once you actually pass through section 141 subsection 1 and subsection 2, where you are eligible to be appointed as auditor of the company, due to some reasons you are being what? Disqualified. Due to some other reasons you are being disqualified. That means you are actually eligible as per 141 subsection 1 and subsection 2, but due to some other reasons there are some disqualifications, basically focusing on the auditor's independence, you know, to make the auditor appear to be independent. Somewhere you are able to remember this something called as independence of appearance. I said auditor must be independence in mind as well as he should appear to be independent. So the Companies Act wants the auditor to look independent to the third party. When the third party sees the auditor, he should feel, yeah, this auditor will be independent. Now to make him appear to be independent, there are few people whom you need to disqualify, because these people will not appear to be independent because of having certain transactions or doing something with the company which they are going to audit. Are you getting my point? So let's see what is it. First they say a body corporate other than LLP. So disqualification. Following person shall not be eligible for the appointment as auditor of a company. First one, a body corporate other than LLP registered under LLP Act 2008. So body corporate is disqualified, but from the definition of body corporate you can exclude what? LLP, because LLP you can appoint. So body corporate other than LLP registered under LLP Act 2008. A body corporate cannot audit another company. Because body corporate being a separate legal entity, the members may come and go, but the company will go on forever. Corporate will go on forever. So that is the reason by which they are saying body corporate needs to be disqualified, because body corporate does have the members keeps on changing. It's not like partnership. Okay, so that is why body corporate is disqualified. Okay, but LLP can be appointed. LLP can be appointed other than LLP. Next, an officer or employee of the company. Who is it? An officer or employee of the company. I repeat, an officer or employee of the company. So if the company is going to appoint an auditor of a company, if the company is going to appoint the auditor for the company, they cannot appoint its officers and they cannot appoint its employees as the auditor of the company. Okay, because the officer or employee of the company is what? Disqualified. Officer or employee of the company is disqualified. When I say officer, it includes, come on, director, key managerial manager, key managerial personnel, shadow directors. I repeat, director, manager, key managerial personnel, shadow directors. I repeat, an officer or employee of the company. I repeat, an officer or employee of the company. So if there is a company and there is an officer, a chartered accountant who is the director of the company. Okay, there's a chartered accountant who is the director of the company. He is disqualified. Why? Because he is the officer of the company. He is the officer of the company. Okay, if you have a book and a pen, just take down this question. Come on, just take down this question. I'll show you. Not question, just write like this. Director of holding company. Director of holding company. Can he become the auditor of the subsidiary company? Okay, director of holding company hyphen a chartered accountant. Okay, there's a director of a holding company who is a chartered accountant. Can he become the auditor of the subsidiary company? Can he become the auditor of the subsidiary company? Director of the holding company, he is a chartered accountant. Can he become the auditor of the subsidiary company is my question. What is the answer? Now please understand, director of the holding company, chartered accountant, can he become the auditor of the subsidiary company? Now please listen, as per the Companies Act 2013, what it says, an officer or employee of the company is disqualified. An officer or employee of the company is disqualified, which means what? Of the company is disqualified means what? Whichever company you are the director, that company you are disqualified. Whichever company you are the director, that company you are disqualified. But you can be the auditor of any other company. Now, I am the director of holding company. I am the director of holding company. I cannot be appointed as auditor of the holding company. But I can be appointed as auditor of any other company, which includes a subsidiary company. Are you getting my points? It is an audit, is an officer or employee of the company is disqualified. An officer or employee of the company is disqualified. That means whichever company I am the director, that company I cannot do audit. Any other company I can do audit. That means even if I am the director of holding company, I cannot audit the holding company, but I can audit which company? Subsidiary company. Listen to me carefully. This is as per the section 141 subsection 3 of the Companies Act. Practically it is not possible. But if the question in the exam is this, you will have to answer this way only. Do you understand? It's a very, very important question. Okay, it's a very, very important question. Please understand. Please understand. Okay, I'll show you how it has to be read. Partnership is not incorporated, man. Partnership is basically an agreement. You know, partnership is by an agreement. Nobody incorporates a partnership. Okay. Now, so basically, please understand. See these two examples. CA in practice is the director of RST Limited. On combined reading of 141 subsection 3, it may be concluded that CAG will be disqualified to be appointed as an auditor of what? RST Limited. Why? Because he is the director of RST Limited. Okay. Now, GSEA in practice is the director of Z Limited, holding company of RST Limited. On combined reading of 141 subsection 3 and 259, it may be concluded that G would be disqualified to be appointed as auditor of which limited? Z Limited. Why? Because G is the director of Z Limited, but would not be disqualified in case of what? RST Limited will not be disqualified in case of what? RST Limited. Are you understanding the problem that you're facing? You should learn to read law properly. It says an officer or employee of the company, Read this. G, SEA in practice is the director in what? Z Limited, holding company of RST Limited. So he is a chartered accountant, director of the holding company. Now, can he be appointed as auditor of which company? Of the subsidiary company is the question. He would be disqualified in holding company because he is a director. But would not be disqualified in what? Subsidiary company. Why? Because in subsidiary company he is not the director. Section says an officer or employee, come on, of the company. Repeat with me 1-2 times. Of the company. Don't forget, please. An officer or employee of the company. Do you understand? Of the company. Okay. Now, okay, please go through this properly. Of the company. Now, next third one. Come on. It says an officer or employee of the company is disqualified. Same way now it says a person who is a partner or who is in the employment of an officer or employee of the company. Repeat, a person who is a partner or who is in the employment of an officer or employee of the company. So previously in 141 subsection 3b, they disqualified the officer or employee of the company. Now as per 141 subsection 3c, they are disqualifying the partner or the employee of the officer or employee of the company. So see, who is being disqualified? A partner of an officer of the company, employee of an officer of the company, partner of an employee of the company, employee of an employee of the company. So I repeat, a partner of an officer of the company, employee of an officer of the company, partner of an employee of the company, employee of an employee of the company. That means they disqualified officer employee. Now they are disqualifying their partner, their employee also. Okay, so 141 subsection 1, subsection 3, A, B, C is done. Okay, a body corporate other than LLP. Yes, then we have officer employee of the company, then a person who is a partner in employment of an officer or employee of the company. Clear? Next, come to the fourth one, very, very important. Come on, this you have to read with me. It says a person who or his relative or partner, a person who or his relative or partner. Okay, what are they doing? Is holding, come on, is holding any security of or interest where? In the company or its, come on, subsidiary or of its holding or associate company or a subsidiary of such holding company. So repeat this once again. A person who or his relative or partner is holding what? Any security of or interest where? In the company or its subsidiary or of its holding or associate company or subsidiary of such holding company. That means if the person who is to be appointed, or his relative or partner is holding any security or interest where? In the company in which he is going to be appointed, or the company's subsidiary, or the company's holding, or the company's associate, or the subsidiary of the holding company of the company, subsidiary of such holding company. Okay, so if you or your relative or your partner is holding any security or interest in the company, you will be disqualified. Even if you are holding, your relative is holding, or your partner is holding. If you people are holding not in the company but in the company's subsidiary or the company's holding or the company's associate or company's holding subsidiary, then also you will be disqualified. Are you getting my points? But listen to me carefully. In case of a relative, I'll tell you who are the relatives later. In case of a relative, there is a sub-provision. Why? Because who is the most dangerous here? Relative. Correct? Imagine this. No, you have a relative. Okay? He is a chartered accountant. You don't like him. And he is going to be appointed as auditor of a company. Now you know there is 141 subsection 3D. You don't want him to be the auditor of the company. What will you do? You will quickly go and purchase one security of the company. That moment he will be disqualified. Do you understand? So government clearly knows Indian relatives are waiting for such moment, a chance. So that is why you have a separate point for relatives. What is it? It may be noted that A relative may hold security or interest in the company of face value not exceeding rupees 1 lakh. That means relative may be allowed to hold security in the company of face value not exceeding rupees 1 lakh. Of face value not exceeding rupees 1 lakh. That means relative may be allowed to hold security in the company up to a face value of rupees 1 lakh. Up to a face value of rupees 1 lakh. It is only in case of, come on, only in case of what? Relative. Imagine, I am holding securities in the company. I am holding securities in the company. Face value 99,000. Face value 99,000. Can I be the auditor of the company? Can I be the auditor of the company? No. Why? Because I am holding security in the company. My partner is holding security in the company. Face value 99,000. Can I be appointed as auditor of the company? My partner is holding security. Face value 99,000. Can I be the auditor of the company? No. Why? Again, my partner is holding security in the company. Now, my relative is holding security in the company. Face value 99,000. My relative is holding security in the company. Face value 99,000. Can I be the auditor of the company? Answer is yes. Why? Because relative is allowed to hold security or interest in the company of face value up to rupees how much? 1 lakh. What value? Face value, face value, face value. What value? Face value. Not exceeding rupees 1 lakh. So up to 1 lakh is possible. And the word used is what? Security. Listen to me carefully here. Security, not shares. Which means what? It includes shares, debentures, bonds, everything. The word used is security, security. Okay, so this 1 lakh limit is only in case of a relative. Only in case of a relative. Do you understand? Now listen to me carefully. Now there is one point that you have to, now there is one question you need to answer first. Now imagine that I am appointed as auditor of a company. Imagine that I am appointed as auditor of the company. Okay, after I am appointed as auditor of the company, I become the director of the company. Imagine I am appointed as the auditor of the company. After I am appointed as auditor of the company, I become the director of the company. Now what will happen? Imagine I am appointed as auditor of the company. After I am appointed as auditor of the company, I become the director of the company. Now what will happen? What will happen? Okay, in that case you are saying disqualified, correct? Why disqualified? Now you should be very, very careful. Now look at 141 subsection 3 now. Look at 141 subsection 3. 141 subsection 3 is talking about, listen to me carefully here. 141 subsection 3 says, the below mentioned persons shall not be eligible for appointment. Shall not be eligible for appointment. Now I can see few doubts regarding, sir, what about the independence of the auditor in case holding company and all that. Please understand, Companies Act you should learn without any common sense, no sentiments and no intelligence. When the Companies Act says of the company means of the company, that's it. You should not think too much. If the Companies Act feels independence is not affected, it is not affected. You know, if independence is affected, they will address it. So please understand, it is not affected. Companies Act says of the company, done. That's it. No common sense, no intelligence, no sentiments. That's it. Okay. Now, here it says, shall not be eligible for appointment as auditor of the company. Now, what question did I ask you now? I asked you, once I am appointed as auditor, after I become the auditor, then I become the director, what will happen? Clear? Now that is not as per 141 subsection 3 actually, it is as per 141 subsection 4. Now what is 141 subsection 4? Where a person appointed as auditor of a company incurs any of the disqualification mentioned in subsection 3, after his appointment, he shall vacate his office as such auditor, and such vacation shall be deemed to be what? Casual vacancy in the office of the auditor. That means where a person appointed as auditor of a company incurs any of the disqualifications mentioned in subsection 3, after his appointment, he shall vacate his office as an auditor and it will be as what vacancy? Casual vacancy. So it is 141 subsection 4 which talks about disqualification after appointment. 141 subsection 3 talks about disqualification for appointment. Are you getting the difference? 141 subsection 3 discusses on disqualification of an auditor for appointment. 141 subsection 4 discusses on disqualification of an auditor after appointment. So, question I asked you now is after appointment. So, answer is as per 141 subsection 4. So, 141 subsection 4 says once you are the auditor, then you become the director. 141 subsection 4 says you will have to vacate your office and that vacancy shall be called as what vacancy? Casual vacancy. Now why did I discuss this now is to discuss one point which is very important. Imagine that you have a relative or you are auditor of a company. You are auditor of a company. Now once you are the auditor of the company, you have a relative. Okay, imagine brother. He has shares in the company and face value is 90,000. Face value is how much? 90,000. You are going to be the auditor of the company. The brother is holding shares in the company, face value 90,000. Can you be appointed as auditor? Are you eligible? Are you disqualified? You are not disqualified. Why? Because your relative is holding only face value of shares is how much? 90,000 that you are eligible. Because relative may be allowed to hold security in the company up to a face value of rupees 1 lakh. Now imagine value 1,80,000. Now what will happen? Now after appointment, 141 subsection 3, immediate application of 141 subsection 4 will not be there. What will happen here is, it says students may also note that in the event of acquiring any security or interest by a relative above the threshold prescribed, corrective action to maintain the limits as specified above shall be taken by the auditor within a period of how many days? 60 days of such acquisition or interest, which means only in this case 141 subsection 4 will not be applicable immediately. You can take corrective action within a period of 60 days from the date of holding by the relative of more than 1 lakh. Are you getting my points? See, what you should understand is basically the relative 141 subsection 4 should have been applicable to you because you are disqualified after appointment. But here they are clearly given you can take corrective action within a period of how many days? 60 days from the date of holding by the relative. But I please tell you this is only in case of a relative. Okay, only in case of a relative, the 60 days applicability. No other place, you can apply this 60 days concept. You will be immediately disqualified. Any other example? Only in this case of relative holding security in the company, face value up to 1 lakh. If there is an increase of more than 1 lakh after appointment, you will get 60 days to take what action? Corrective action, which means bring back the limit to how much? 1 lakh. And one more thing which you should be very careful is that please write this in your notebook. The limit of 1 lakh and grace period of 60 days would be applicable where securities are held. Come on. In the company only. Which means this grace period will not be applicable if the relative is holding. Grace period or 1 lakh limit is not applicable if the relative is holding in which company? You remember this? So many companies are there. Subsidiary, holding, associate, subsidiary of such holding company. Now this 1 lakh limit and this grace period 60 days is only applicable in case of a company. See, 60 days will be applicable only if 1 lakh is applicable. And this 1 lakh limit is applicable only if it is in the company. That means if the relative is holding even 1 share in what? Subsidiary company or holding company or associate company or subsidiary of holding company, you will be what? Disqualified. Why? Because that limit of 1 lakh cannot be applied. It can be applied only when the relative is holding, come on, in the company. The same concept of the company above, same concept in the company here. Do you understand? Only in the company. That means if the question says, my mother is holding equity shares of face value 90,000 in subsidiary company. Okay, can I be auditor of the holding company? Answer is no. Because 1 lakh limit is not applicable in case of subsidiary company. Now my mother is holding shares in the company, face value 90,000. Can I be appointed? And the answer is yes, because in the company face value up to face value 1 lakh, it is possible. Do you understand? Very, very important in the company. Okay, you might not understand this quickly when I discuss right now. You will have a lot of doubts. Please be calm and quiet and read through. You will understand. Calm and quiet and read through. You will understand. Do you understand? Fine. Now, who are relatives? Relatives definition is given here properly. You know, there's a relative definition. What is the definition of relative? Father, including stepfather, mother, including stepmother, son, including stepson, son's wife, daughter, daughter's sister, including stepbrother, sister, including stepsister. Okay, you should be, you know, is sister's husband your relative? Sister's husband, sister's husband. I'm not asking your personal relationship whether it is relative or not. As per Companies Act, is sister's husband relative? See, do you have sister's husband here? No, sister's husband not relative. It is daughter's husband, son's wife. In the exam, they will give brother's wife, sister's husband. Be careful. Not relative, not relative, not relative. They can hold how much ever shares they want. Daughter's husband relative, son's wife relative. Okay, we have a song for relative also. Most of you would know it. Please learn with the rap music that we have learned in our regular classes. Okay, this is the definition of relative. Go through holding or associate company or subsidiary of such holding company in excess of rupees 5 lakhs. Indebtedness for an amount in excess of rupees 5 lakhs to these companies. If you or your relative or your partner, in case of providing guarantee security, indirect indebtedness, you will be disqualified if it is in excess of rupees 1 lakh. Are you getting my point? Fine. Done. This is the fourth disqualification, 141 subsection 3D. It deals with holding security, indebted for an amount in excess of rupees 5 lakh, guarantee security of indebtedness of third person for an amount in excess of rupees 1 lakh, where in the company or its subsidiary or its holding or its associate or subsidiary of such holding company. Okay, fine. Next comes 141 subsection 3E. What is 141 subsection 3E? It says, it's talking about business relationship. It talks about business relationship. Now tell me, what is business? What it says? It says a person or a firm who, whether directly or indirectly, has business relationship with whom? With the company or its subsidiary company or its holding company or associate company or subsidiary of such holding company or associate company of such nature as may be prescribed. That means if the person or the firm who is going to be the auditor has, whether directly or indirectly, business relationship with these companies, you are disqualified. Okay, so you want to be appointed as auditor of this company, but if you have business relationship with the company or any of these companies, you will be disqualified. Now I want a simple answer from you. Above there were some list of companies, here also there is some list of companies. Is there any difference of the list above about holding security, indebtedness, the list above of the companies and the list here of the companies? Is there any difference? Okay, thank you so much for the response. Subsidiary of associate company. It is subsidiary of associate company. Correct. Subsidiary of associate company. So the difference basically is subsidiary of associate company. Subsidiary of associate company. Yeah, subsidiary of associate company. Here the extra company is subsidiary of this company, associate company. Very good, subsidiary of associate company. Now it says if you have business relationship with these companies, you will be disqualified. Now what do you mean by business relationship? Whenever you enter into commercial transactions with business people, it is called as business relationship. When you enter into what transaction? Commercial transactions, it will be called as business relationship. That means when you purchase goods, when you provide some service to them, when you avail some services from them, these are all commercial transactions and it is called as business relationship. Correct. Now, when you purchase some goods, imagine that you go to Reliance supermarket, you purchase some goods from there. Now, there is a commercial transaction with Reliance. Now, there is a business relationship with you and Reliance right now. Now, does that mean you cannot audit Reliance if you purchase goods from Reliance? Does that mean you cannot audit, audit a company if you purchase goods from them, if you avail some service from them, you cannot do audit? That will be very difficult, no? Imagine they say you cannot do audit of Aditya Birla Group if you purchase IDSM. You cannot do audit of Reliance if you purchase JioSIM because you are their customer. No, it cannot be like that, correct? So that is why what they have done, they have said, business relationship means any transaction entered into for what? Commercial purpose, except, we see this point first, commercial transactions which are in the ordinary course of business of the company at what price? At arm's length price, like sale of products, services to the auditor as a customer in the ordinary course of business by companies engaged in the business of telecommunication, airlines, hospitals, hotels and such other similar business. That means if you have entered into commercial transactions in the ordinary course of business with these companies at what price? At arm's length price, then it will not be considered as what? Business relationship. That means I can purchase goods from the company which I audit, but it should be at what price? Arm's length price. I take JioSIM at arm's length price. I avail services of the hotel at arm's length price. I purchase goods from some supermarket at arm's length price. I avail the services of the hospital, but at what price? Arm's length price. So arm's length price is to be is the price. What is arm's length price? A price that is determined by a buyer and a seller who does not have any relationship among them. A unrelated buyer, unrelated seller. The price that they enter into is an arm's length price. Okay, so you can have commercial transaction at what price? At arm's length price. Okay. Second, can you provide services to them? They are saying yes. You can also provide services to these companies, provided it should be allowed as per Chartered Accountants Act and as per Companies Act. That means, read this, business relationship shall be constituted as any transaction entered into for what purpose? Commercial purpose. What purpose? Commercial purpose, except the transactions which are except, it means these are not business relationship. If you are providing what service? Professional service permitted to be provided under Chartered Accountants Act and Companies Act, and you are providing commercial and you are availing, you are buying goods or getting services from them at what price? At arm's length price. It need not be considered to be what? Business relationship. Are you getting my point? So business relationship is considered as any transaction entered into for commercial purpose, except one, when you are purchasing goods or availing services at arm's length price. Then second, when you are providing services allowed under Chartered Accountants Act and Companies Act. Okay, so please learn the definition of what? Business relationship. Are you getting my point? Fine. Next disqualification is a person whose relative is a director or is in the employment of the company as a director or key managerial personnel. A person whose relative is a director or is in the employment of the company as a director or key managerial personnel. That means if my relative is a director of the company or is employed as a key managerial personnel of the company, I am disqualified. Very simple point. Next point, it says, if a person is in full-time employment elsewhere, that means a person who is in full-time employment elsewhere is disqualified. If he is in full-time employment, he is disqualified. Or a partner of a firm holding appointment as its auditor, a person or partner of a firm holding appointment as its auditor, if such person or partner is at the date of such appointment or reappointment holding appointment as auditor of more than how many companies? 20 companies other than one person company, dormant company, small company, private company having paid up share capital of 100 crores. This is called as ceiling limit, 141 subsection 3G. It says if the person or a partner is holding appointment of auditor of how many companies? 20 companies. Already they are holding appointment of 20 companies. Then they are disqualified to be appointed as auditor of a 21st company. But in that 20 companies, you do not include what? One person company, dormant company, small company and private company having paid up share capital less than 100 crores. Which means these 4 companies you can accept how much ever you want. Other than these 4 companies, at a point of time, maximum you can accept audit of how many companies? 20 companies. So you are disqualified if you are holding appointment of more than how many companies? 20 companies. It is per person, per partner. Okay, if there are 3 partners in a firm, A, B, C. Okay, the total audits that the firm can accept is how much? A20, B20, C20. Total how much? 60 audits. But these 60 audits, the ceiling limit that we are learning is not applicable to a 1% company, or it is not that limit. When you calculate, you need not include 1% company, dormant company, small company and private companies whose paid up share capital is less than how much? 100 crores. Are you getting my point? So you should be very careful. This is called a ceiling limit of the auditor. Ceiling limit. Okay, 141 subsection 3G. That means if you are holding appointment as auditor of more than 20 companies, in the calculation of 20 companies, don't include, come on, 1% company, Small company, dormant company, private companies whose paid up share capital is less than 100 crores. Do you understand? Fine. Next, a person who has been convicted by a court of an offence involving fraud and a period of 10 years has not elapsed from the date of such conviction. Please underline the word conviction. That means person has been convicted by a court. What do you mean by convicted? Is he accused or is he guilty? He is guilty. He is proven guilty by the court of an offence involving what? Fraud. So once you are proven guilty by the court of an offence involving fraud, you are disqualified for a period of how many years? 10 years. You are disqualified for a period of 10 years from the date of such conviction. A person who has been convicted by a court of an offence involving fraud and a period of 10 years has not elapsed from the date of such conviction. Are you getting my points? And last is a person who is rendering any services mentioned in section 144 of the Companies Act to the holding company or subsidiary company or the company. 144 is a section which deals with prohibited services, which you have to learn by yourself. Section 144, prohibited services. There are certain list of services which are what? Prohibited given here. Okay, so 144, if you are providing these prohibited services to holding company, company or subsidiary company, then you will be disqualified. You cannot provide these prohibited services to the company or holding company or subsidiary company. These are disqualifications under 141 subsection 3. These are disqualifications under 141 subsection 3. Disqualification under 141 subsection 3. Do you understand? 141 subsection 3. We'll just take a 2 minutes break. A two minutes break before we go to section 139. Now, I'll answer the question of analytical procedures and substantive analytical procedures in my lecture of audit report. Okay, I have gone through that question. I'll surely answer that question in the lecture that I record today. Yeah, generally we'll try to complete in 1 hour, but that doesn't happen sometimes because of the topics I tend to explain a little bit more so that the students will be able to benefit really well. That is why sometimes I explain little too much more than it is a revision lecture. You can understand that because I'm not going like perfect revision. I'm explaining also a little bit more, correct? So that is why it is taking a little bit more time. But if in case anything is left off today, we'll continue the discussion tomorrow. Okay, we'll continue in the live discussion, not tomorrow, day after tomorrow when I come live. Okay, whatever is left today, we'll continue for another 15 minutes. We'll try to finish whatever possible of section 139. What is left, I will continue in the next live session day after tomorrow. Okay, instead of recording it, I'll come live. That is better. And the audit report, I'll anyways record it and I will upload in the YouTube channel maximum by tomorrow morning. Okay, because speaking for 1 hour makes you a little tired. So yeah, Live classes always is at 5 o'clock, every alternate days. Every alternate days at 5 o'clock. Every alternate days 5 o'clock. Because tomorrow you have your SM. Tomorrow you have your SM. Okay, so it's like this: audit, SM, audit, SM. That's how it is going right now. Are you actually able to understand? You are able to follow what I am teaching? Yes? Because I cannot see you. That is the biggest problem. You know, I cannot see you. So it's very difficult to understand whether you're able to catch hold of me. I'm just speaking to my laptop. Thank you so much for the response. Thank you so much for the response. It gives me a little more energy to move forward. So I'll take this 15 minutes. And whatever possible, let's complete. And after that, what we'll do is, what is left, I'll take in the next live session. Okay, guys? Okay, guys? I don't want to rush up and, make sure that I don't cover it properly. I want to make it slow so that you'll be able to understand it. I know it's a revision lecture, but still there will be certain things which cannot be left unexplained, right? That is the problem. Okay, fine. So I'll just continue with the discussion. Section 139 regarding the appointment of auditors. Section 139, appointment of auditors. Yeah, I forgot to reduce my size. My hair is all over the place because of the quarantine. I'm not able to cut my hair. It is the biggest problem. Yeah, so 139 is about the appointment of auditors. Now see, appointment of auditors, what you should understand, I think appointment of auditors, your book is much better. Now see this appointment of auditors here. 139, appointment of auditor is first auditor and subsequent auditor. Yes, the auditor appointed first is the first auditor. Yes, once again. And the auditor appointed afterwards is called as subsequent auditor. So it is 139. Section 139 deals with the appointment of auditors. Now here you have to deal with appointment in government company and other than government company. Now why is there is a differentiation between appointment of an auditor of government company and appointment of auditor of other than government company? Because in case of a government company, you should understand that all the appointments, in case of a government company or government enterprise, government departments, government ministries, the auditor's appointment or the audit is done by a person called as C&AG, Comptroller and Auditor General of India. Anything related with government will be with the Comptroller and Auditor General of India, either the appointment or he will do the audit. So that is why we have a separate subsection for government company and separate subsection for other than government company. Okay. So first we'll start with the first auditor of other than government company. Now see, in case of first auditor of other than government company shall be appointed by the board of directors within 30 days from the date of registration of the company. So the first auditor of other than government company shall be appointed by the board of directors within a period of 30 days from the date of registration of the company. Within a period of 30 days from the date of registration of the company. So once the company registers, the board of directors shall appoint the auditor within a period of 30 days. Within a period of 30 days from the date of registration of the company. Which auditor? First auditor. Which company? Other than government company. Within a period of 30 days from the date of registration of the company. If the board is failing to appoint, they shall inform the members of the company who shall within 90 days, please mark this, at what meeting? Extraordinary general meeting. Understand? General meetings are of two types. One is annual general meeting, second is extraordinary general meeting. Here the members will use extraordinary general meeting to appoint the first auditor. Why are the members using the extraordinary general meeting? Because board of directors could not appoint. Board of directors should have appointed the auditor within how many days? 30 days from the date of registration of the company. Are you getting my point? So if the board of directors fails to appoint within a period of 30 days from the date of registration of the company, they shall inform the members who shall within 90 days at an extraordinary general meeting appoint the first auditor, and the auditor so appointed shall hold office till the conclusion of first AGM till the conclusion. Please understand, conclusion of the first AGM. Very important word is conclusion. So the auditor shall hold office till the conclusion of first AGM. So first auditor will hold office till the conclusion of the first AGM. Okay. So very clear. No, first auditor of other than government company. Once the company is incorporated, within a period of 30 days, the board of directors can appoint. If the board of directors fails to appoint within 30 days, they shall inform the members, who shall within 90 days at an extraordinary general meeting appoint the auditor. The auditor so appointed shall hold office till the conclusion of which AGM? First AGM. Are you getting my point? There comes the first auditor. Now comes which auditor? Subsequent auditor. Which auditor? Subsequent auditor. What does subsequent auditor say? So once the first auditor who leaves after the conclusion of which AGM? First AGM. Now we need which auditor? Subsequent auditor. So at the conclusion of first AGM, first auditor will be leaving his office. He will retire in the conclusion of the first AGM. Now we need which auditor? Subsequent auditor. Now in case of subsequent auditor, you see, every company shall at the first annual general meeting appoint an individual or a firm as the auditor, who shall hold office from the conclusion of that meeting till the conclusion of its sixth AGM, and thereafter till the conclusion of every sixth AGM. Which means what? Now at the first AGM is where the first auditor, when the first AGM concludes, the first auditor will vacate his office, means he will have to retire. So it will be in the first AGM that the subsequent auditor is appointed. And when the subsequent auditor is appointed at the first AGM, he will hold office from the conclusion of that AGM till the conclusion of which AGM? Sixth AGM. Till the conclusion of which AGM? Sixth AGM. So from the conclusion of that AGM till the conclusion of sixth AGM. And in the sixth AGM, again you will appoint the subsequent auditor who will hold office from that AGM till the conclusion of the sixth AGM from there. So what happens in case of subsequent auditor? He is appointed in one AGM. He will go till the conclusion of the sixth AGM. Again from there sixth AGM. Again from there sixth AGM. So every sixth AGM you will be appointing which auditor? Subsequent auditor. Are you getting my point? So subsequent auditor is appointed in the first subsequent auditor will be appointed in the first AGM. He will hold office from the conclusion of that AGM till the conclusion of sixth AGM. Then every subsequent auditor will be appointed every sixth AGM. Are you getting my point? So first auditor will hold office till the conclusion of first AGM. Subsequent auditor will start his office from the conclusion of first AGM. It will go till the conclusion of sixth AGM. Okay. This is in case of which company? Other than government company. And they are clearly saying few things here. One, before you appoint subsequent auditor, you must obtain what? Written consent of the auditor. You must obtain written consent of the auditor of such appointment, and you should obtain a certificate from him saying that he has satisfied certain conditions, like he is not disqualified, he is within the ceiling limits. All those things, a certificate must be provided by the auditor, subsequent auditor. So one, you have to obtain from him written consent. You have to obtain from him written consent that he will accept the appointment if he is appointed. And second, you have to obtain from him a certificate. You have to obtain from him a certificate saying that he has satisfied certain criteria as per section 141. That is, he is not disqualified, he is within the ceiling limits and all that. And once you appoint the subsequent auditor, you will inform the auditor concerned, and you should also file with the registrar within 15 days of the meeting a notice. So within 15 days of the meeting in which the auditor is appointed, a notice shall be filed with the registrar. So what you should do after the appointment is done? So before the appointment is done, you should obtain from him written consent and a certificate. After the appointment is done, what you will do? You will inform the auditor as well as you file a notice with the registrar within 15 days of the meeting in which the auditor is appointed. Do you understand? This is subsequent auditor in case of which company? Other than government company. Can we just revise? First auditor in case of other than government company shall be appointed by the board of directors within a period of 30 days from the date of registration of the company. If the board of directors fails to appoint, they shall inform the members, who shall within 90 days, at which meeting? Extraordinary general meeting, appoint the first auditor, and the auditor so appointed shall hold office till the conclusion of first AGM. What about subsequent auditor? He will be appointed in the AGM. By whom? By the members, who shall hold office from the conclusion of that meeting till the conclusion of which AGM? 60 AGM. Once he is before his appointment, what should the company do? Obtain from him one, written consent. Second, certificate. After appointment, what should the company do? Inform the auditor, inform the registrar within a period of 15 days of the meeting in which the auditor is appointed. Are you getting my points? Now, let's take case of first auditor of government company. Now, in case of government company, who will appoint the auditor? I told you, in case of government company, the power goes to whom? To the C&AG. So, they say the Comptroller and Auditor General of India will appoint the first auditor within a period of 60 days from the date of registration of the company. The C&AG of India shall appoint the auditor within a period of 60 days from the date of registration of the company. If the C&AG fails to appoint, they shall inform the board of directors, who shall within next 30 days appoint the first auditor. If the board of directors fails to appoint, they shall inform the members, who shall within 60 days at extraordinary general meeting appoint the auditor. So here, first 60 days the C&AG has the power. Once the C&AG cannot appoint, they shall inform the board of directors, who shall be given 30 days. If board of directors cannot appoint, the power shall be given to the members, who in extraordinary general meeting in 60 days appoint the first auditor, and the auditor shall hold office till the conclusion of which AGM? First AGM. This was the same point in what? In other than government company also, till the conclusion of which AGM? First AGM. Are you getting my point? So here it is 60-30-60, there it is 30-90. Here it is C&AG, board of directors, members, there it is board of directors, members. Are you getting my points? Now comes subsequent auditor of government company. Subsequent auditor of government company is very simple. You know, he shall be, so for their appointment happens in every financial year. In case of government company, appointment happens every financial year. Who will appoint the subsequent auditor? The C&AG will appoint. When he should appoint? Within a period of 180 days from the commencement of the financial year. So in case of government company, appointment happens every financial year. Appointment happens every financial year. And who will appoint? The C&AG will appoint the subsequent auditor within 180 days from the commencement of the financial year. Within the 180 days from the commencement of the financial year. In case of other than government company, subsequent auditor will be appointed when? Subsequent auditor will be appointed when? In first AGM, then in every 60 AGM. In case of government company, subsequent auditor will be appointed when? Every financial year. Within 180 days from the commencement of the financial year. In other than government company, who appoints the subsequent auditor? Members, because it is annual general meeting. In case of government company, who appoints the subsequent auditors? C&AG. Are you getting my points? And here also he will hold office till the conclusion of the AGM. He will hold office till the conclusion of the AGM. So appointment happens every financial year within a period of how many days? 180 days from the commencement of the financial year. Are you getting my points? This is appointment of first auditor and appointment of which auditor? Subsequent auditor. Appointment of first auditor and appointment of which auditor? Subsequent auditor. Appointment of first auditor and appointment of subsequent auditor. Okay, fine. Now I think as far as we are concerned, let's go to casual vacancy in our next live session, because casual vacancy will require a little bit of time. Already it is 5:50. We have done 1 hour 20 minutes of our session. So 1 hour 20 minutes of our session we have done. So I think we will surely go to casual vacancy in our next live session. Okay, because it requires little bit of discussion, and we have removal of auditors also to do, which we will continue in the next live session. Okay. Okay. So thank you so much. I hope you have understood whatever I have dealt today. I am sure that I have not discussed something very quickly. I have taken the time to make you understand the topic in detail, as if you are listening it for the first time, correct? As if you are listening for the first time. So I hope that you will take these lectures. Please tell your friends also to watch these videos. Please make sure that you tell your other students who are not aware of the lectures that I have taken. Please send it to them. And I hope that you have all the other lectures are uploaded in the YouTube channel. You can all get those videos. You know, we should all be together at this time. It's a difficult time for all of us. You know, everybody is finding it difficult to learn, and a lot of things are happening, but still we need to be together. We need to work hard. We need to study hard. Okay, so please make sure that you spread this word across. Tell everyone about the class, and if you feel the class is useful, obviously if you feel the class is useful, please inform everyone around you and help me to reach the students, because I really want to help the students get good marks and make them use this time that they have during this quarantine period in the best possible manner. Yeah, so thank you so much for your patient listening to the lecture. So meet you day after tomorrow with the continuation of these topics, and I will upload the audit report most probably by tomorrow morning. At least by tomorrow surely it will be uploaded, because already I am a little tired with the revision lecture I have taken now, so I need some rest. So maybe not today at least. I will upload it by tomorrow. Okay, so have a good day, have a good evening, take care. Okay, take care, be home, stay home, and stay safe. Thank you so much. Tomorrow SM lecture, don't forget, evening 5 o'clock we have SM lecture. Nirav Mehta, our Nirav Mehta sir would come. Okay, thank you so much. Yeah, bye.